Fed on Wednesday announced no rate changes for this month, but they did indicate, potentially only one cut for the year of 2024. Inflation and the Fed are certainly in focus here this week. But before we jump into that, there was a huge shift in some of the labor market data that came out on Friday. So we will be sure to kind of cover that first as we jump into this week of inflation and Fed conversation. My name is Brandon Steele, financial advisor with Mainsail Financial Group here in Bellevue. And our goal every Thursday is to bring to you the market news, the data, the trends that we're watching, and hopefully weed out a bit of the noise along the way. So as I had suggested, I want to start right out of the gate with what we saw last week on Friday. So obviously we do these every Thursday, and what that creates is a bit of a cliffhanger as we go into the weekend, because on Friday we had a very big data point come out, which was the non-farm payrolls. And for those who tuned in last week, you may remember that some of the jobs data that had come out prior was starting to suggest that maybe the labor market was cooling a bit. We had lower job openings on Tuesday. We had less jobs added through the ADP employment report on Wednesday. But Friday is really the big one to watch. It's the non-farm payrolls, typically the one that's taken with a little bit more seriousness, I guess, in terms of how the market does react to this data. And what we saw prior, just as a quick refresher, was with all this jobs data suggesting maybe the market was cooling, the labor market was cooling, the stock market was reacting to that in a positive way, basically thinking that that may mean that the Fed does cut rates, because they had suggested that, in a scenario where the labor market does cool, that might be something to focus on. So we'll spend more time on that as we get into our question of the week. But nonetheless, Friday came out with a huge surprise. So on Friday, non-farm payrolls added 272,000 jobs for the month of May, a huge reversal, again, from the jobs data earlier in the week. And the market turned pretty quickly, again, thinking that the Fed might actually, again, be keeping rates higher for longer. And I will share, the stock market had a reaction, but the bond market was really the one to watch here last week in terms of how interest rates reacted to all this jobs data. So the highlight here is just how quickly things can change, right? We had data going into the week that really suggested, and the market reacted to this idea that maybe the Fed would cut sooner. Friday, quick shift, and all of a sudden all was forgotten as we got a little bit hotter non-farm payrolls or jobs number heading into the end of the week there. So this will tee up a great conversation today, because today we're going to focus on inflation and the Fed, and we will kind of wrap up talking more about the Fed press conference specifically. But leading into that, we actually had CPI, Consumer Price Index data, come out Wednesday morning before the Fed press conference. And basically, it was a very low number. The headline number, so again, including food and energy, was actually flat, suggested that Consumer Price Index were actually flat for the month. And core, so we take out food and energy in that example, showed that core was up 0.2% versus expectations of somewhere around 0.3. Now, what I want to highlight is these numbers are appealing, and at first glance it's like, okay, well, maybe inflation is under control, but let's lift up the hood here a little bit, and I wish that this was covered a little bit more. When you do lift up the hood, it's important to understand where this data is coming from. And on the headline number, the one that is obviously the important part of this, which was the flat number, the headline number includes food and energy was down significantly for the month of May. So really, most of the impact to this total inflation number is as a result of energy prices coming down. Will that sustain? Who knows? There's a reason that the Fed talks about core instead of headline inflation, is because energy goes up and down. This example in this month was a down. What happens in June? Obviously, we'll have to wait and see. On top of that, we had producer price index come out today, and it's the same idea. Core PPI was basically flat, and again, headline number was actually down for the month. So really interesting to see. But again, it was mostly based on energy. So do take this with a bit of a grain of salt. And of course, all this led to the Fed press conference. So basically, the takeaway before I get into some of the details is the Fed on Wednesday announced no rate changes for this month. And really not a surprise there, but they did indicate, potentially only one cut for the year of 2024. And with that, let's jump into our question of the week, which is where we're going to spend a little bit more time on the Fed press conference and decision from Wednesday. So the Fed decision obviously was that they decided not to change rates. And I don't think this was really a surprise to anybody. I think hardly anybody probably suggested or thought that the Fed was going to be adjusting rates here in this meeting, but really the conversation was about how they shared what they're looking at ahead and some of the message that they share as far as, what might be projected through the rest of 2024. And some of the things I want to highlight. So first off, again, they did indicate that it's very likely only one cut for the year of 2024, which is a big shift from where we started this year. However, although the markets love to, this idea of the Fed cutting, the markets have essentially this year been pricing in the idea of multiple rate cuts through 2024. So it's really important to pay attention to how the market reacts to this, not just today, but in the coming days to come. The Fed had suggested that it has been a tough balancing act, I believe was the terms that they had used, to try and lower inflation and deal with the strong labor market. So the reason I'm highlighting this is because the Fed is clearly continuing to stress not just inflation anymore, but also the labor market impacts and how that might actually shift their perspective on rates in the future. Again, this is a bit of a change. So this meeting and the last meeting were really the two where they've started to highlight this more and more. Last meeting was really the first we heard much about it. Prior to that, it was all about inflation. It was all about bringing it down to the 2% target. And then last meeting, they brought in this idea of watching the labor market. So again, I think they are certainly looking for a reason to cut, but they are maybe doing it based on this potential one cut this year, hopefully doing it pretty responsibly. On top of that, there has lately been some conversations about actually hiking rates. And what I will share here is that nobody in the committee, or at least from the Fed's mouth, nobody in the committee is suggesting rate hikes as their base case. Now, that doesn't mean that they are leaving hikes off the table. It just means that nobody really expects that that's the direction they're going to go. So I wouldn't say to take rate hikes off of the table entirely, but certainly from what the Fed is sharing, it seems very unlikely. And I think that, especially as other central banks are starting to cut rates, for the Fed to raise rates would be very difficult. Hopefully they don't get caught up in cutting too soon, but it's very unlikely that we would see rate hikes. On top of this, I want to mention that they had highlighted the inflation report, saw that the inflation report that morning had basically suggested progress, and I think you had mentioned this idea of building their confidence. But I would be very cautious to worry too much about one inflation print, right? We saw this last year. At the end of 2022, we saw multiple inflation prints suggesting that inflation was coming down. And here we are, or I'm sorry, in 2023 and 2024 through, the 4 months of it suggested completely the other direction, right? It showed how sticky inflation can really be. So just be cautious of worrying too much about one inflation data point. It is important, and it may be a sign that inflation is coming back. But again, most of this is on the back of energy prices coming down significantly, and it's only one data point. We've been here before, so we want to make sure that we can continue to see this. And hopefully, and I think the Fed is watching that as well. I don't think they're going to make any decisions based on one inflation reading. In fact, I think they're what they saw last year hopefully will stay fresh in their mind for how they address any rate cuts in the future. So thanks for tuning in. Be sure to tune in next Thursday. We will kind of be touching on some updates as far as consumer sentiment, but markets are also closed next Wednesday. So kind of a split week in terms of trading, but be sure to tune in next Thursday. We'll catch you up on some of the data between now and then. Have a great upcoming weekend. We will see you next Thursday at 3.